Hey all, welcome to ShareTreck. This is Raj here. Friends, I'm going to talk about two companies that are in our watch list on a regular basis. And we haven't spoken about them much, but I have a positive catalyst and a negative catalyst out there. So I'm going to talk about BlueBird and Ginkgo Bio. So let's get started. Welcome back, friends. BlueBird Bio Inc. has completed the first commercial cell collection for Lifegenia. That is the report that we have. And Lifegenia is a one-time gene therapy for the treatment of sickle cell disease in patients with a history of vaso-occlusive events or VOEs. Lifegenia was approved by the FDA in December 2023. So you may recollect that BlueBird has already got tie-ups with insurance providers, and we were anxiously looking forward to sales data. So they had given some sales data, but this is the actual cell collection data now. And the patient's cells were collected at Children's National Hospital in Washington, D.C., which is part of BlueBird's national network of more than 60 qualified treatment centers, or QTCs, which are selected based on leading expertise in transplant, cell and gene therapy and sickle cell disease, and receive specialized training to administer Lifegenia. And as you know, friends, this also involves myeloablation and replacing the bone marrow with the modified Lifegenia. So it's a difficult procedure, and the QTCs are selected very carefully. So I think that this is going to be a catalyst for BlueBird Bio, which is languishing under $1 for a while. So I hope this pushes it above $1, and maybe in the Q2 earnings result, if they start talking about the numbers, that should do a little bit of magic for BlueBird Bio. Next, I want to move on to Ginkgo Bioworks. I have some bad news for Ginkgo Bioworks in the sense that this happens to all companies that fall below $1. So Ginkgo Bioworks, we have been following it for quite a while, and many of us have been very, very optimistic. They announced that they received a notice on May 7th, 2024 from the New York Stock Exchange informing the company that it is not in compliance with Section 802.01C of the NYSE Limited Company Manual because the average closing price of the company's Class A common stock was less than $1 per share over a consecutive 30-day trading period. And the notice does not result in the immediate delisting of the company's Class A common stock from the NYSE. But in accordance with applicable NYSE rules, the company will notify the NYSE on its intent to regain compliance with applicable NYSE continued listing standards within 10 business days of receiving the notification. So I think Ginkgo might already have responded to New York Stock Exchange. We don't know what it is. But NYSE rules give Ginkgo a 6 months period to regain compliance with the minimum price criteria. And the company intends to regain compliance with NYSE's continued listing standards and is considering all available options to do so. And the NYSE further clarifies that receipt of NYSE notice does not affect Ginkgo's business operations. The company's Class A common stock will continue to be listed and traded on the NYSE during the 6-month cure period under the trading symbol DNA, but will have an added designation of .BC to indicate that the company is not currently in compliance with the NYSE continued listing requirements. So this is the scoop, my friends. And what happens in this situation is that either the market conditions improve because of some catalyst and the stock goes above $1 and becomes compliant, or the company does a reverse split where it may combine 10 shares and make it 1 share in order to stay above the $1. Reverse splits are usually lead to a loss in investor value, according to my personal opinion, based on what I understand. Of course, what I'm saying here is not financial advice, so please do your own due diligence. But I will recollect the case of SQL Biotech, which we were following earlier, and it also fell below $1, got the same kind of notice. It could not go above $1, so it got delisted at the end of the day. When a share gets delisted, then it becomes a bit difficult and more expensive to sell those shares. So people generally take remedial measures. So that also adds to the pressure. So let us hope that Ginkgo Bioworks is in a position to salvage itself. But right now, when I see the share price, it's way below. They have moved too fast, acquiring too much. They have a lot of money in their balance sheet, but so much of shares also. Let us hope for the best out here. So friends, those are the two news items that I wanted to bring to you. With that, I would like to end this video here. Please smash the like button and the subscribe button and help us go to 20,000. Thanks and have a great day, and bye for now. catch up with you again in the next video. See you later.